Good afternoon and welcome to a special edition of Modern Wall Street. This afternoon we have Stephen Guifoyle from Sarge 986 and he will be talking to us about equity markets ahead of the holiday weekend. Stephen, great to have you here again.
Thank you, Remy. The pleasure is mine.
Well, there's been a lot of talk about geopolitical tension and we've been seeing some risk-on trading. Now, gold has been at highs in today's trading session, but we still have a lot to go through in terms of geopolitics. Now, there are concerns about Syria, North Korea, and Rex Tillerson has just finished his meeting with Putin, and we had the press conference with Lavrov. So, given that after the session ends, Donald Trump will be meeting with the Secretary General of NATO, what can we expect?
Well, this is where the move into the safe havens has come from. It's largely the saber rattling with North Korea, the friction with Russia. I don't think Syria is really a threat to national security, except that some of ISIS lives there. But outside of that, I don't think, other than sending a message to Russia, it's that big a deal. But it's why you see gold trading above the 1260, 1265 level. Now, if that level can become support, gold could go to 1315. That's why you see treasuries, the 10-year trading below a yield of 2.3. That's why the VIX is elevated. That's why the utility sector and the real estate sectors have been hot, because people are, I can't say it's risk off. They're not afraid. Well, they're uncertain as far as the market goes. So they're moving out of their profit names, the names where they have gained since November, and moving into these safer areas.
Well, it's interesting you mentioned that. I do want to ask you about transports. Now, we're seeing transports lower, and there's been a lot of focus on United Airlines this week following an incident where a passenger was dragged off an aircraft. But that aside, what do you expect to see in terms of transports? And prior to the beginning of this interview, you also mentioned what's happening in small caps. So fill us in.
Well, it's a little scary because these are areas that generally, not always, but generally can be leaders in the marketplace. And transports are down. I mean, I'm not looking at the screen right now, but they're down a rough percent, even though airlines are generally having a good day because Delta Airlines reported, I can't say good earnings this morning, but they had kind things to say about the next 9 months. So Delta, which I do own, and Southwest, which I also own. I don't own United, thank goodness. But the airlines are performing well, and still it's not really helping the transports all that much. The rails are getting hit pretty hard. So that, coupled with the small caps, which are behaving almost opposite of what they did yesterday, with the dollar weakening somewhat versus its peers. As small caps, you like to see a stronger dollar. You would also like to see tax cuts from the administration or from Congress at some time, because small caps tend to pay a higher effective tax rate than do other types of stocks. So they would benefit the most. So if they're selling off, that probably means they feel those goals are further away.
Well, that brings me to my next point. So this week we've been seeing interesting trading action in terms of the dollar as well as the broader equity averages. We've been in a little bit of a range, and when we get to the close of each session, we've been seeing interesting settlement, but we have to keep in mind it's a holiday shortened week and volume has been fairly light. So when we do break out of this so-called range, what do you expect to see?
You're talking about the dollar, right?
Yes, as well as the equities.
I believe the dollar will actually soften over time. I think the Fed will continue to try to raise rates. But the Fed, at least for now, is being vetoed by the bond market. And the bond market has the final say. Now, I can't say for sure that'll continue. If the Fed is persistent, they will drive interest rates higher. They'll also drive us into recession. I'm not taking a shot at the Fed there, although that's one of my favorite sports. I'm just saying that the bond market doesn't necessarily have to do what it's supposed to do. And then the dollar doesn't have to do what it's supposed to do. And the president, as we know, President Trump he's a soft dollar guy. He's a manufacturing guy. He wants to turn the tables on the countries that have had a favorable trade deficit with the United States.
And very quickly taking a look at oil prices, both the API and EIA reported drawdowns in inventories, but we're still pretty elevated in terms of Brent as well as WTI prices. So what's going on there?
Well, see, 53 is a pretty important level for WTI crude. Now, oil's off a little bit today despite those inventory drawdowns. But as long as it doesn't crack through 53 and hold below that level, it's still positive for crude going forward. Now, the next level up is 55. 55 is going to be a tough nut to crack, all right? I don't know if they'll be able to get above that level, but they certainly can spend a lot of time between 53 and 55, which is going to be real good for, I guess, U.S. producers out of the Permian. Because the Permian has a lowered cost of extraction, only about $40 a barrel, maybe even lower, maybe $37, $38 a barrel for the Permian. So as long as it's up here, you're going to see the U.S. rig counts climb, and you're going to see the likes of Saudi Arabia and OPEC have to cut back and push an extension onto their cuts, which they're already talking about. They meet on May 25th, by the way. So I think you're going to see somewhat stable oil prices. I think even if it breaks at 53, I don't see it going below the $47 level where it bottomed out maybe a month ago. I think U.S. production is here to stay for the long haul. The U.S. will take market share away from the Middle East, and that'll be to their detriment.
And last but not least, before we head into the holiday weekend, we have earnings coming out. And we also have some retail figures coming out on Friday, although markets will be closed for Good Friday. So what do you expect to see Thursday and Friday?
Well, retail sales at the headline level at least will suffer somewhat because the auto sales were weak for the month. I almost wish we were trading on Friday because with
Sure.
CPI and retail sales, something would move. Instead, we'll probably be looking at these numbers and have to react either in the futures market on Sunday night or in the equity market on Monday. As far as earnings, hey, we got the banks coming up, right? We got JP Morgan and Citigroup.
Right.
I'm long both of them. Not as long as I was. I kind of wish I was longer Citigroup because I think based on valuation, they have the best chance to actually do something here. But I think traders in general, as we go into a 3-day weekend with such geopolitical risk that we always spoke about, will be very unlikely to put on extra risk going into that 3-day weekend. I think they're more likely to lock in gains and take money out of the marketplace. So even tomorrow, if there is reason to buy stocks, I think towards the end of the day, you'll see traders selling stocks.
Okay, Sarge, well, it's always a pleasure to have you here at the New York Stock Exchange, and we'll see what happens in tomorrow's session. So thank you for joining me.
You sure will. Thank you, Remy.
Thank you.